And so this is the next catalyst for crypto, which most aren't wary of. Yes, there is a macroeconomic catalyst coming up next week, which could roil the markets, and we need to be aware of what's going on and the impact it could be having. Bitcoin on the way for a fourth red day this week, and it's had a pretty tough week, but we were not surprised by this. We caught this on Sunday, noticing the hidden bearish divergence, and now we're seeing continued weakness in the price, now falling back below 24,000 here on Bitcoin. I'm going to show you the key support levels, what needs to happen for this long position to stay intact, and also what are some of the risks to the downside. We're also going to look at the macro markets to find out what's going on and what is the next narrative going into next week and the next few weeks leading up to the next FOMC meeting. Make sure you hit on the like button. Don't forget to subscribe. As always, if you want to trade any of these moves, you can do so using BYBIT or BitGet. Some amazing bonuses in the links in the description. Those are affiliate links which do support the channel. So if you don't want to support the channel, you have to sign up to them directly without the bonuses. Right, as you can see here, sitting here on the weekly candles here on Bitcoin, we've got a big, well, not a big, but we've got a red week, right? It's a disappointing red week at a critical moment when we thought we were breaking through the 24,000 level mark. We're getting a bit of consolidation here. And now the fears are in the market. Was this just a dead cat bounce? Was this a big move to the downside, followed by a little relief, and then throwing us back to the downside? Remember, I've always maintained that until we flip our weekly EMA ribbon bullish, which is past the, coming all the way up here to 35,000 close on a weekly candle, we continue to be in the controls of the bears. So for anybody who thinks we've taken control from the bears, on the weekly time frame, we have not at all. So we need to continue to have that respect for the bears in this pattern. Now, I personally don't think this relief rally is over just yet. I'm still looking here at the daily. And what I want to show you here on the daily are the patterns we're seeing. And what we want to see is, just zoom in here, you can see that once we saw this bearish divergence, we saw this on the 4-hourly chart, we've had a big move to the downside. 4 red candles to the downside, getting rejected from 25,000 and thrown right back below 24. We didn't get a retest at 24, right? A nice situation would have been come in here, get a retest at 24, and nice continued bounce. We didn't. We've fallen back lower. So now we need to look at what are the next levels of support. And you can see where this rectangle is drawn. This was from our member live stream yesterday. We were going through and identifying on our Q&A live stream where those key areas are. And as you can see, that's heading here into this rectangle. Okay, this is the rectangle where I expect a test of the long-term trend line now. If we lose that trend, then things start to get ugly. We could be heading back to 22,000, which is this green line here, and maybe back into this channel, which we were in for a very long period of time, back in this channel between 18,700 and 22,000, the top bound of this channel. Now, to give us some further confidence around this support level, if I bring out the EMA ribbon, you can see that ties in perfectly with the EMA ribbon. So I'm expecting a nice bounce here from the EMA ribbon. If we lose our EMA ribbon here on the daily, that is not going to be good. I want to see us just use it, bounce off of it, and in the long run, that'll be better for us if we can test our EMA ribbon, turn it into support, and get a good higher high above 25,300. That is the bullish case here. But we need to be wary of the bearish situation, which is we could lose this trend line, and we could end up coming back to 22,000 for some support and maybe entering back into the channel. That's what we're looking at here. We know the bears continue to be in control on the longer time frames. Now, let's take a look at Fear and Greed Index. Fear and Greed still sitting at about that 41 mark. Markets are feeling fairly comfortable at this level compared to where we've been before. More importantly, let's take a look at the US markets. Yesterday, they closed green, right? The Dow Jones closed green, the S&P closed green. The NASDAQ was slightly flat, given some weaker performances by NVIDIA and some of the major companies. And we know Bitcoin likes to correlate itself with the NASDAQ. But I did share yesterday again that we aren't seeing the proper correlation. I mean, 4 red days here on a row on Bitcoin. If we head to the QQQ, we've had 3 days in a row of green. Friday, here you've got, that was Friday, right? So you had Friday, then you had your weekend here on the 15th of August. That was Monday, Tuesday, and now we're going to see how they set up for Wednesday. So Monday and Tuesday were green for the QQQ and for the SPY, which is the S&P, big green candles for the S&P, and yet Bitcoin was red on both those days. So we have to ask ourselves what is going on and keep an eye on this. If it's just a technical level, then it's fine. But if there's something fundamental going on here where the markets are saying, yep, we're turning risk on, but we're not turning that risk on that we're not going to go back into Bitcoin, that is a little bit of a worry. Because remember, we got punished to the downside along with equity markets. When risk was off, it went risk off across the board. But now if investors are saying, okay, we're turning risk back on, but only in select stocks, and less growth stocks, then that's not going to be great for Bitcoin. And at the moment, that's what you're seeing. You're seeing the Nasdaq lagging behind the S&P and the Dow Jones, which are more your blue chip, safer companies, your banking stocks, your energy stocks. Some of those others are in there. You're seeing those move a little bit faster. That being said, Bitcoin is even lagging behind the Nasdaq. Nasdaq is now back to April levels, and Bitcoin is nowhere near its April levels. April level on Bitcoin puts you back at 39,000. So we are seeing that lag, and that is one of the concerns for me. And that brings us on to our next big catalyst, which I wanted to bring to you first before any of the channel is talking about it. So if you appreciate that, smash up the likes, make sure you hit up the comments down below and let me know what you think. But we've got the Jackson Hole Symposium, okay? Now, this is a meeting where the Fed officials sit for a couple of days. They're doing so between August the 25th and 27th in Kansas, I believe. Oh, sorry, Wyoming. And they're going to be talking about their next plans. And there's various things that they could be talking about. But the main one, which I think they're going to be focused on, is whether they focus on QT and what their next plan is. Quantitative tightening. Remember, all this time the government was printing money. Recently, they decided to start shrinking the balance sheet. And you can see this tiny little bit down here. That's all they've managed to do in terms of bringing the balance sheet down. We were close to 9 trillion of assets on the Federal Reserve. This is mortgage-backed securities and treasuries, and they need to shrink this. Apparently, by September, they'll be able to drop this by $95 billion a month. Now, what impact does this have? Well, the reason this is so important is this is exactly similar to interest rate hikes. So remember, the market is getting a little bit excited because they think the Fed could be pausing rate hikes, right? They could be going from 75 basis points to maybe 50 or maybe even lower, right? That's what's helping the markets rally. But if the Fed come out from Jackson Hole next week and say, we're coming out with a new plan for quantitative tightening because it's not been effective, we need to drive this down, and this is what we're going to do, that could have a huge effect similar to an interest rate hike. So some people are saying, under the assumptions that they're rolling off 95 billion a month, they will shrink by 2.2 trillion by the end of 2024, okay? So by the end of 2024, they're hoping to be at around 7 trillion, which puts you about here. So that would be a decent dent in the total treasury. Still nowhere near to the pre-pandemic levels. I mean, pre-pandemic levels brings you to just here before they started climbing at about 4 trillion, and they're saying they could be at 7 by the end of 2024. Now, if they do that and they let the treasuries roll off and they don't reinvest, that would shrink it at 95 billion a month and therefore 2.2 trillion by the end of 2024. That, if you do the calculation, has the equivalent effect of a 74 basis point rate hike. Okay, so this is where things get interesting, and we need to pay attention to this meeting next week. If Jerome Powell and the Fed are sitting down and coming up with a game plan of quantitative tightening, that could be the next agenda on everybody's minds. Definitely one to watch out for. We'll be covering it here on this channel. Another thing we needed to take a very important look at was the dollar index. The dollar index is what's leading a lot of our suffering here on Bitcoin, which is interesting. Now, the dollar index is managing to get a bounce here on its daily chart. Remember, we wanted it to lose its daily EMA ribbon, but we're very close to doing that. You can see these wicks here below, and then it bounced. It started getting its bounce, and now the worrying thing is, will it go and post a higher high? I want to see weakness. I want to see it start falling, and that could be good for crypto and risk on stocks, but at the moment, it's not doing that. And why does it not do that? This reflects fear for recessions and global climate. So when you hear things about Russia, Ukraine, or you hear things about China, if you hear things about a recession and a global slowing down, people flock to safety and they flock to the dollar versus other currencies. It just is the safest asset out there right now. So that's why they call it the greenback. So obviously for us, we laugh and we think, oh, Bitcoin is the safest asset and therefore we invest in Bitcoin. But still, the traditional markets, when they see a recession, when they see fearful things going on, even though the dollar is still weak relative to everything else, it's considered the safest asset backed by the US government. And so they flock to the US dollar. That, if it climbs, will be bad for Bitcoin. We need to see a long-term reversal here. We need this to fall to the downside. That can help get a sustained rally here on crypto. So there you have it, guys. There is your Wednesday morning update. If you appreciate this, don't forget to smash up the like button and subscribe if you want to buy any crypto. Check out the links to BYBIT or BitGet, and I'll see you in the next one.